Hello everyone and welcome back. Let's take a look at autonomous driving Aurora. They just recently had a memo that leaked that was supposed to go to the board of directors by the CEO. Instead, it went to the staff and it outlined a lot of cost controlling measures. And Bloomberg took the memo, ran with it with the headline, but TechCrunch actually did a better job. I want to take a look at that. We're going to take a look at the charts and the fundamentals with this company. Is this a good buy? Can you wait till 2024 for full commercial deployment, or is this company just going to continue to burn cash while they're bringing in a little bit of revenue? Is this the right play, or should you steer away? Ticker symbol AUR, Aurora, on a mission to deliver the benefits of self-driving safely, quickly, and broadly. Take a look at the Bloomberg article. The headline here, technology hyperdrive, self-driving tech company floats possible sell. I'll give them credit for that, to Apple or Microsoft, but this is definitely a pump of a stock that's been falling down pretty hard. But is this giving us some insight that we wouldn't otherwise have, that there's going to be an announcement coming pretty soon that they're actively working and something is going to happen with this company that could let it, at these very low prices, gain some momentum in the future? And I think that's what we want to take a look at here, is that this memo that was supposed to go to the board actually made it to the staff, got leaked out, and it reviews a whole list of cost control measures, even the possibility of going private. And if we look at TechCrunch in a leaked memo, the CEO weighs out spin-outs, layoffs, and acquisitions against the sell to big tech. There's a whole list of cost-cutting measures down here that are very standard practice, but I mean, this is pretty in-depth of making sure that they don't leave anything off the table. As far as hiring freezes and job cuts, we know we've seen that on all these companies. I mean, Proterra didn't do it, Tesla's doing it, GM, Ford, you name it. I mean, they are all being aggressive on performance management and intensive duplication and prioritization. And basically that just means, are we duplicating these positions? Let's not backfill positions that are vacant, that don't need it. And they're very concerned about company morale because people have a choice. They're looking at eliminating the CEO's equity grant, reducing some software licenses by 20%, and suspending annual bonuses, which are typically given to executives and managers, and stopping food service and other cost control measures. Now, this is very interesting here that they have hired Allen and Company to analyze the acquisition path according to the memo. So that's a very important statement to understand, that this isn't just like a game. They are really working towards doing this. Now, if you'd like to support the channel and the Patreon, you can see down here I put that the stock price might be considered low at $2.09 to $2.37, and we'll take a look at the charts. Now, if you're looking to open a brokerage account, be sure to check out Webull. Get up to 12 free stocks by signing up, and there's no dollar amount required to deposit, but there is a two-step process. Open the account with Webull and get your 2 free fractional shares, each valued up to $300, and then deposit any amount whatsoever. It could be $1, and you get those 4 to 10 free fractional shares of stocks valued up to $3,000. Now, the biggest reason why I like Webull is because you get access to those IPOs. There's 7 on the platform right now that you can choose from, and I'll be talking about those more this week. So as soon as the buyout scenario even comes out, and that's what it is at this point, until it's confirmed, it's just a scenario, you can get people tossing back and forth facts and ideas on whether or not this fits or makes sense. And you'll even see the share price respond on whether or not it agrees with these proposals. And of course, you're going to get some forward momentum in the price if there is a potential acquisition by Apple or Microsoft, because you would expect there to be a premium valuation for the purchase. Now, Stone Fox Capital does such thing. They go through the buyout hype and they throw around some scenarios which I don't think are very value added. If you're going to make a decision to buy this, you want to look at the current valuation and understand that there is or isn't some potential upside, and try and anticipate what the bottom is for this stock, which is difficult, but you can look at the technicals. So we can see that it does have some pretty decent trading volume But considering last Friday that this was at 27 million, we are going to close much lower, even though it does look like it's got some positive momentum. We have a very high market cap of 2.43 billion. And if we look at the 52-week range from 183 to $17, you can see we are on the bottom end of this range with the volume coming back to what a normal average trading volume would be. You can see we're going to close a little bit higher today, but I would like to see it sustain the 6 to 8 million trading range and double what the average volume is, just to show that there's still interest there. Now, there's going to be some developments, I believe, coming from this company. They're not scenario planning to not deliver some kind of news update in the months or weeks to follow. So I do expect to hear something, but this price to sales trailing 12 months of 19 times, and it's been as high as 42 times, that this is still a pre-revenue company. So there's some expectation that they don't have any revenue. And for them to have some and this not have an NA, you may find if you do additional research on some of these other autonomous vehicles that companies, that they don't have any revenue at all. So the key partnerships with Toyota have allowed this company to generate revenue, for example. So Waymo, GM, Cruise, True Simple, Tesla, you name it, they are all listed here all the way through. Embark in the filings as a risk that any one of these companies could have an event where they just do better, they have more money, they've got better marketing, R&D spend, resources ultimately to get to self-driving technology first, which involves this pilot deployments, which they have to accomplish. They've got a huge regulatory barriers per state to be able to deploy this. So this is a very painful process that they are making progress on. Through 2022 to 2024, this is when they expect that commercial launch and for them to be driver ready. So we'll see what happens as far as the developments on this one. I think it's very interesting to pay attention not only to the strong leadership team that they have and a vast experience, but the fact that this is the company that acquired Uber, that Uber driverless autonomous driving portion of the business. And we've got an analyst rating on TipRanks with a 62% upside, but I don't know how much weight I would place behind this with just one analyst rating this. We do want to take a look at their financials though, just real briefly, the fact that they do have revenue over the last 4 quarters for having those partnerships and being able to deliver some payloads, and even the partnership that they have with Toyota. You can see back here just 3 quarters ago also that they had from the SPAC $1.6 billion, and it's starting to come down, but not at an aggressive pace. But because they did delay their commercial launch, they're going to need a little bit more cash, and they're trying to strategically plan for that. We did have a little bit of a dip, but it is starting to find support down here, and I've got this on the day chart so you can just see the general flow of the graph ever since it hit this $3.28 mark after earnings. You know, it started to come up. It started to get a little bit of support, but then pulled back. But now with this news, it looks like it's starting to gain some more support. Let's drill in to the 30-minute chart so that way you can see this area that I let everyone in the Patreon know about, that this is that buy range that I thought it was low. Down here at about 224, 236 range. I mean, if you got this under 233, I think you're doing well. And this went as low as 217 today. I would say, obviously, this could revisit 209 or in the lower $2 range, because you want to take a look at where this was before it actually had the rumor news that came out. And it looks like it's starting to meet some resistance here at 253. Of course, 250 is going to be your psychological barrier there, but it looks to be trying to sit above the 2 standard deviations in this Bollinger Band. It hasn't really gotten outside of it, except for this earlier phase back here when we first got that news. Then it did a pullback, it did a drop off in the morning, and we sit right here at about 246 after hours. That's all I've got. If you enjoyed this video, be sure to subscribe to the channel, hit that thumbs up button, and I'll see you in the next video.